the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Welcome to the Business Standard Banking Show. My name is Bhaskar Datta. In this week's episode, we discuss the significant developments of the week, including the launch of the RBI's pilot for CBDC trading in government bonds, and the central bank's decision to adopt a gradual approach when it comes to introducing a full-fledged digital currency. Our banking expert Tamal Bandyopadhyay elaborates further on where India is placed when it comes to the rollout of a digital currency. We have an interview lined up with Ramesh Iyer, Vice Chairman and Managing Director of M&M Financial Services. At the end of the episode, we shall discuss the results of the last poll and ask you the question for this week. So stay tuned. India joined the ranks of 50 countries that have made significant headway in adopting digital currencies, with the RBI introducing a CBDC pilot for trade in sovereign bonds. Sovereign bonds, which represent the risk-free rate of borrowing in the economy, are the pricing benchmarks for a vast variety of credit products. The launch of the pilot went off without a hitch, with bond trades worth Rs 275 crore being facilitated using the e-rupee on November 1. While the CBDC trades at the moment account for a minuscule portion of overall trading, the step marks a milestone in India's adoption of a digital currency. The RBI, which has unequivocally expressed its disapproval of cryptocurrencies, has said that it will expand the scope of CBDC trading to the retail segment within a month. Last week, RBI Governor Shaktikanta Das said that the central bank is not going to hurry to launch its digital currency and would consider the learnings from its pilot projects. The subject of digital payments brings us to how the trajectory of cash usage has evolved since the government announced the demonetization of Rs 500 and Rs 1000 currency notes exactly 6 years ago. Official data show that while digital payments have gained pace, the dependence on cash as a transaction medium has not reduced. The currency with the public, which was at Rs 17 trillion just before the demonetization exercise, was at a record high Rs 30.8 trillion as on October 21st, 2022. However, the demonetization exercise and the restrictions on movement placed during the COVID-19 pandemic have led to much wider acceptance of digital transactions, with the UPI gaining a lion's share of the transaction pool. The country's flagship digital platform processed over 7 billion transactions in October, fresh high. In October, the official data showed that the platform processed transactions worth Rs 12.11 trillion. While transactions on UPI have grown leaps and bounds, a feature that is yet to gain a foothold is the use of the RuPay credit card. Large issuers of credit cards are yet to introduce the feature, which was launched in October. Dilip Asbe, Managing Director and Chief Executive Officer of NPCI, said that lenders would push the RuPay credit card feature on UPI if the value of transactions derived from small merchants who were exempt from paying the merchant discount rate did not exceed 10% of the total value. Amid the spending fervor that manifested itself after 2 years of intermittent restrictions on activity, bank credit growth continued to grow in leaps and bounds. With the economy showing momentum following a contraction in the first year of the pandemic, credit to industries in September 2022 grew at the fastest pace that it has grown in the last 100 months. Credit to industry, which accounts for 27.6% of non-food credit, was up 12.6% yearly to Rs 32.4 trillion in September. Among sectors, petroleum, gems and jewelry, engineering, iron and steel, and construction were the key drivers of industry credit growth. Experts flagged a shift away from capital markets to bank credit and the underlying inflationary momentum in the economy as the key reasons behind the firm disbursement of credit to industries, while the booming bank credit growth suggests a much needed recovery in economic activity. In September, the Indian financing sector witnessed scenes of shock and outrage when a 22-year-old pregnant woman was crushed to death as she attempted to prevent loan recovery agents from taking away her father's tractor. The woman's father had taken a loan from Mahindra & Mahindra Financial Services in 2018. Subsequently, the RBI directed Mahindra & Mahindra Financial Services to cease all recovery and repossession activities through outsourcing arrangements. In an interview with Business Standard's banking editor, Manojit Saha, Ramesh Iyer, Vice Chairman and Managing Director of Mahindra & Mahindra Financial Services Limited, spoke about the impact of the RBI's ban and the steps that the company was taking to tighten its norms.
Welcome to the Business Standard Banking Show. On September 22, Reserve Bank of India directed Mahindra & Mahindra Financial Services to stop carrying out recovery or repossession activity through outsourcing arrangements, citing material supervisory concern. The regulator's action came days after reports that a 27-year-old pregnant woman was crushed to death while she was trying to stop a loan recovery agent working on behalf of Mahindra & Mahindra Financial from seizing her father's tractor over loan dues. The incident took place in Hazaribagh in Jharkhand. Ramesh Iyer, Vice Chairman and Managing Director of Mahindra & Mahindra Financial, joins us today to explain what went wrong and the corrective steps they have taken, and also to talk about the second quarter results. Mr. Iyer, welcome to the show.
Thank you.
Soon after the Hazaribagh incident, Anish Shah, the Mahindra Group CFO, said in a statement that the company will investigate the incident from all aspects. What are the findings of that investigation?
No, so clearly, internally we looked at what should be further tightened and what actions we should put in place so that we don't have any such incidents ever in future. So that's something that we carried out internally, and we are pretty clear in our minds that there is a process in place. We follow all process, all due diligence extremely well and correct. I have run this business myself now for 30 years, and this is the first of the incidents that I had to also go through. And while it's very premature, the police investigation is still on, and they are on the spot there. I myself visited Ranchi and met people around. Let's wait for the incident report to come out. Our belief is, it's an accident and there is nothing that anybody would have done intentionally for recovery of a loan. I think we will ensure our people are trained and continuously trained for if there are any gaps, all repo agents that we will work with, because we don't work with, an agent who's not working with other NBFCs or other banks and all that. So we just don't go out and appoint an unknown agent of a type. And, mistakes and accidents do happen, but we will have to be more cautious and careful always in future is the only lesson that I have learned out of this, because there is never a perfection to all of this. We can't say doing it all right. So we have to continuously keep improving, and we will keep doing that all the time.
Mahindra Finance has said that the impact of this ban by RBI will be temporary. Do you getting some indication from the regulator with your discussions how long the ban should be in place?
No, I think the onus is on us also to go back and tell them what are the steps that we have taken and how we will in future be acting on it, etc. And we are reasonably sure that once we are able to provide sufficient policies around how we are tightening our policies, etc., etc., we are very confident that the regulator will also look at it positively and give us that opportunity to recommence. I just want to clarify here that we have been stopped recovery and repossession by using external agency while we can continue to do ourselves. And we were not using any external agency for recovery of dues. Right. Our people were recovering the dues, and we had companies providing staffing support, and we had not outsourced collection to anybody. So therefore,
repossession was outsourced.
Repossession was outsourced. And that also we have said that normally we do about 4,000 to 5,000 vehicles a month. Fortunately, the market conditions have substantially improved for people earning and able to repay, and we don't have to really repossess. So,
Correct.
effect of this repossession not being able to do at this stage will be not more than maybe 2,000-3,000 vehicle. And it is also important to understand repossession is never the first step of recovery. It is a last resort for recovery. If a customer is extremely delinquent and not able to respond to the requirement, and he's not able to earn, he's willing to even surrender. Many a times it is a customer who wants to surrender the vehicle also.
What kind of a disbursal growth you're looking for the current financial year?
So we just put out our October number. We have had the highest disbursement in history of Mahindra Finance this October. We have had 5,000 crore plus disbursement. Of course, we have to recognize the fact that in this month, Dussehra and Diwali was in the same month. So to some extent, demand of the future has come into this month. But nevertheless, 5,000 crore by itself for 1 month is a very high number. So we believe that per quarter, doing about 10,000 crore does not seem to be a challenge.
I see. So 40,000 crore this year disbursement.
We have already done first 2 quarters roughly about 20 odd thousand, and we are already 5,000 in this month. So if we clock the same 10,000, you are right, 40,000 crore of disbursement, we does not look, and this does not yet factor the price increase on the vehicle which are likely to happen going forward.
But does it worry you that the interest burden of the consumer which has increased can also lead to delinquency?
So it can, but so far we have also not increased the rate very high to people. Right, we have absorbed some cost and we have just about now started increasing 50 basis point and whatever. But please understand one very simple thing. Let's say the vehicle price is 8 lakh rupees per minute and they bring in 2 lakh rupee margin, 6 lakh is the loan given. Okay, now on 6 lakh rupee, even if you increase it by 1% for the customer, it is 6,000 rupees per annum. Okay? It is 500 rupee per month. So it is not going to tilt their decision, nor is it going to tilt it to become delinquent.
Right.
The other operating costs like fuel prices, this is a more denting cost for them. And that I very strongly think that the freight rates as well as the passenger fare will go up during this period. People must be waiting for just the festival season to be over. And you will start seeing slowly the freight rates going up, the passenger fares going up in taxi operations, etc. And they will cover it up. See, we should not forget that once the operator incurs a cost, he does pass it on to his consumer finally.
In the current financial year, what kind of margin, what is the guidance on margins?
So this year by itself does not seem to be a challenge because not all our liability is maturing. So we will still end up with 7.25 kind of NIMs. And in the meanwhile, if we do increase the rate, some small benefit out of that can also come. So there will be a compression of 25 basis point is what we see because fortunately we have a lot of past liability.
Thank you so much, sir, for speaking to us. It was a pleasure speaking to you.
Thank you. Thank you so much.
The Reserve Bank of India's SupTech or Supervisory Technology Initiative DAKSH is another step towards making its supervisory processes more robust. This advanced supervisory monitoring system involves adopting the latest data and analytical tools and leveraging technology to implement more efficient and automated work processes. DAKSH is a web-based end-to-end workflow application through which the banking regulator shall monitor compliance requirements in a more focused manner to further improve the compliance culture in all supervised entities. The application will also enable seamless communication, inspection planning and execution, cyber incident reporting and analysis, and provision of various MIS. According to the Bank of International Settlements, SupTech could be a game changer in efficient reporting and proactively monitoring the risk and compliance of financial institutions. It could turn risk and compliance monitoring from a backwards looking into a predictive process. SupTech is the result of the emergence of advanced technologies which have led to newer business models in the financial industry like fintech. The efficiencies that these technologies offer can also be harnessed to support compliance with financial regulation or RegTech and conduct of financial supervision, which is SupTech. The efficiencies that these technologies offer can also be harnessed to support compliance with financial regulation and conduct of financial supervision. While financial regulation or RegTech is already a familiar word in the financial sector, where it refers to applications of innovative technologies that support compliance with regulatory and reporting requirements by regulated financial institutions. SupTech refers to technologies used by supervisory agencies themselves. New age technologies have led to financial services being disrupted. The changes unleashed straddle digitization aimed at reducing costs and improving efficiency. This may involve partnerships between banks, fintechs, e-commerce players, big social media firms, and other service providers. The RBI has been taking steps to encourage innovation and propagate the use of technology to increase the effectiveness of regulation. It started its ADF or Automated Data Flow in 2010. Recently, the RBI has made a concerted effort to revamp its capabilities through initiatives such as Centralized Information and Management System or CIMS and Public Credit Registry or PCR programs. Post the financial crisis of 2008, regulatory reforms led to an upsurge in reporting requirements. With the leap in technology, better data through the harmonization of definitions in data dictionaries and the growth in storage capacity and computing power opened the way for SupTech.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Our consulting editor, Tamal Bandopadhyay, analyzes where India stands amongst other nations when it comes to reliance on cash and how the use of a CBDC could bring down the cost of cross-border transactions. For India, this has key implications, as the country is among the world's largest recipients of remittances. In the interaction, Mr. Bandopadhyay also spoke about the stellar profit growth recorded by banks in the second quarter of the current financial year, as firm demand for credit and rising lending rates boosted the bottom line. As the RBI data on currency management shows, cash still plays a dominant role in Indian consumption habits. Now, would a CBDC be able to, sort of wean off the preference for cash?
Well, it's a very difficult question, Bhaskar, to answer, because as we speak, I think till about a month ago, the so-called currency in circulation, which also includes the cash kept in the bank vaults, but that's a very minuscule part of it. Can you guess? It's a 31.6 trillion. It's 3 times more than what we had seen in December 2016, just post demonetization. Typically during festive season and during elections, cash becomes the king. So will CBDT make India a cashless society? I'm afraid I don't think so, not even in distant future, because at this point, globally, there is no cashless society. I mean, Sweden is almost there. People believe that by 2023 calendar year, Sweden will be cashless. Norway is also closing on, but their economy, the size are very small. So in India, I don't think CBDC will, because of CBDC, will embrace cashless system.
So we saw that the CBDC pilot for bond trading, I mean, that has taken off quite smoothly, but the volumes are of course low. The bond market is already quite digitized to a great extent. So my question is that how do you see the retail CBDC launch, which will take this month? How would that play out?
Point to be noted is, yes, bond market is already all the transactions are digitized, but this is a pilot project. So, it's the banks, whatever their original, the way of doing it. If you see the Reserve Bank of India press release at that point of time, I think it was 2nd November they did. It explains what is the difference. There's 9 banks chosen. They had to open a separate account on that. So it's not like transforming the bond market, but it's like bond market is sort of, loosely speaking, the guinea pig here. You just test market. Now the second stage is the retail segment, which Reserve Bank of India governor announced that it would be done within this month itself. So all of us are waiting. Will it be a geography specific or will it be a social strata specific? We don't know. But the success of CBDC will be actually if the retail segment is covered in a massive way, right from use of less cash to financial inclusion.
So that brings us to a very pertinent question, as in for most individuals, that when I'm using a CBDC, would I earn any interest on it?
No, definitely not. My understanding is no, there's no interest. I think that's the question many are asking. It's just a currency and it's just a wallet, so you will not earn any interest. So Reserve Bank of India is the central authority. The only thing is it's a wallet with a difference in the sense it's issued by the country's central bank. So it's a proxy fiat currency, So I think it will be distributed by the banks, so commercial banks. So you and me will have the CBDC, I think the wallet on our system, that's a mobile, etc. And there will be, like any other private wallet we use.
You have touched upon the need for the RBI to follow a centrally controlled database for a CBDC, and that is because of the size of India's population. So in what way would this database function, and how would banks make the transition to it?
I would like to believe that because of India's population, I'm not privy to any information, so that the distributed ledger, which is the so-called blockchain technology we used, I think in case of CBDC, we may not see that. We may see it's a centralized database, which will be run by Reserve Bank of India. And then the banks will be the connector. And you and me will be using it as an app. So as a sort of wallet. In the course of time, probably it will get into the distributed ledger, all that anonymous one, and the blockchain, etc.
As you have mentioned in your latest article, the RBI so it's made it very clear that it is averse to cryptocurrencies. Now we're seeing that despite the RBI's repeated warnings about cryptocurrencies, we still have a sizable number of investors in cryptocurrencies. Now, to what extent would a CBDC stack up against the allure and the risk, of course, of cryptocurrencies?
Well, in that sense, I think it's an optics, not only in India, but globally. CBDC is being positioned to some extent to fight it out with cryptocurrency. RBI's allergy for cryptocurrency is well known, because cryptocurrency is something which it's neither a currency nor an asset nor a commodity. There is no comparison between CBDC and cryptocurrency. As I said, CBDC is a sort of fiat currency. It will be RBI will be at the center of action, and it will be just a wallet, a way of exchanging money. So there is no ups and downs, unlike say cryptocurrency, which is going up and going down. And only the difference is this: when you buy a stock or when you buy gold, there is an intrinsic value in it, whereas cryptocurrency does not have any value.
So on a more general note, we're seeing that the rupee has gained sharply against the US dollar over the last couple of days. So in last month, we had seen a record low of about 83.29, which was the intraday low. So now it has strengthened. So is the worst behind the domestic currency?
Well, it looks like that. Probably the trigger could be now the everybody's talking about, yes, US will keep on raising rates, but it will not be as aggressive as we had seen in the past, like 75 pips. No more 75 pips. Even though the policy was very hawkish, I mean, or I would say less dovish than what people had expected. I'm talking about the last FOMC, US Federal Reserve rate hike. But subsequently, it's the gaining ground that US will not be as aggressive as it had been in the recent past. And that's why you see the dollar index actually has come down of late recently. And if you see the portfolio investment in India in November, it's pretty good. I think $1.5 billion at least dollar kind of stuff. And RBI is in the market buy-sell swaps. So it's a liquidity neutral transaction. So I think the worst probably is behind.
That's it from our side. Thank you very much for your time. It's always a pleasure to have you on the Banking Show, Mr. Bandyopadhyay.
Thank you.
Last week, we asked you whether the RBI's letter to the government explaining the failure on inflation should be made public. An overwhelming 84% of respondents said yes, but the rest saying no. The RBI governor said last week that he does not have the privilege or the authority to make the letter public. This week, we want your take on CBDC. Do you think the RBI CBDC could bring about a significant shift away from cash in India? You can respond on Twitter, LinkedIn, Telegram, Instagram, and our website. Do tell us what you think. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.